Welcome to 360 Degrees with Ravi. I am a mutual fund distributor. Today we will be doing a market analysis for the month of February till today, that is 3rd March. Before I go to the analysis of the chart, I kindly request you to subscribe to my channel and also share it with your friends. Now let's go to the chart, Nifty chart. So now, if you see the Nifty chart on 1st of December 2022, the Nifty touched a high of 18,900 and then subsequently started falling down. It was a clear case of a lower top, lower bottom where the correction was unrelented. Now finally what happened was, today the market bounced back. The market went up by 250 points. Whether it will sustain or not, it's a very big question mark. Now if you see the chart here, this is the moving average convergence divergence is there. This is much below the mean line. Hence, don't expect the market to be going very high now. At best, the market will be consolidating for a simple reason. The market corrected the last hour of trading by 50 odd points. So now, what is it in store for us for the next week onwards? We need to wait and watch. At this moment of time, I can only say the market bounced at 16,900, which was a support zone, and there will be a resistance around about 17,800, which is a congestion point. Once it crosses 17,800, then only we can say the market rally has started. Today is a clear case of sell on rally only. Now let's go to the Bank Nifty. The Bank Nifty closed at 41,251 after touching a high of 41,440 today. It corrected again by 150 points, which means the profit booking was happening. Even if you see the MACD, it crossed the red line, but it is well below the mean line. It has to cross the mean line, and then only we can be very comfortable to say that the Bank Nifty is doing well. But keep in mind, the banks have performed extraordinarily well in the 3rd quarter, and we expect the banks to continue with their good performance in quarters to come. Now let us see the moving averages of the Nifty and the Bank Nifty. The Nifty, the closing price was 17,895 and the 20 DMA was 17,455, which means in the short term the Nifty will be positive. But when you compare it with the 50-day moving average, again it is positive. It is more than the 50 DMA, which means the market for the short term is good. But when you compare the 50 DMA with the 200 DMA, you see the Nifty is lesser by 200 odd points, which means the pain is going to be prolonged for some more time, unless otherwise the 50 DMA crosses the 200 DMA and sustains for a period of time. We cannot say the market upside will be intact. Now let's see the Bank Nifty. The Bank Nifty closed at 41,250 and it is more than the 20 DMA, which means in the short term it is positive. And when you compare the 50 DMA, again you find that it is slightly lesser than the 50 DMA. That means there will be some bounce, but then it may not be sustained. When you compare the 50 DMA with the 200-day DMA average, it is 400 points on, but for Bank Nifty 400 points is nothing. So it has to cross the 200-day moving average, then in a sustained manner over a period of time, then we can say that Bank Nifty is back in the game. Now what is in store for us? That is more important for the month of March. The month of March is going to dictate the future course of action for the time for the next few quarters. The 3rd quarter results was mute, and the 4th quarter results is not going to be any different. The next 3 quarters is going to be dependent on the global environment, inflation, and the supply chain problems. By the time December comes, if in case the economy settles down, the general election is going to be announced. Once again, people will be putting their brakes on their investment. As a mutual fund distributor, I have one small little advice for the investors. Stay away from the market. Keep investing in the mutual funds and multiply your wealth. Don't go and chase the stocks. You will be in for pain. You never know, it may be a trap for any one of you. So remain invested in mutual fund, and welcome to 360 Degrees with Ravi. Thanks a lot.